Stock market window dressing, the art of looking smart. As investors, as well as we all are capitalists nowadays, it is important that we understand the peculiarities of the stock market prices information we use to help us in our choice exerting. On Wall Street, investing can be a minefield for those who don't make the effort to value why securities rates go to the degrees that show up on quarterly account declarations. A minimum of 4 times each year, safety rates are extra a function of institutional marketing practices than they are a reflection of the financial forces that we want to believe are their key figuring out variables. Not also close. Around completion of every calendar quarter, we listen to the financial media matter-of-factly report that institutional window dressing activities are in full swing. That is as much and as deep as it ever goes. What are they discussing? And also simply what does it indicate to you as a capitalist? There are at the very least 3 forms of window dressing, none of which must make you specifically happy and all of which ought to make you question the honesty of companies that either credit, carry out, or excuse their usage. The better-known variety involves the culling from profiles of stocks with significant losses, and also changing them with shares of business, whose shares have been the most preferred throughout recent months. Not just does this method make the managers look smarter on reports sent to significant customers, it also makes mutual fund efficiency numbers appear substantially extra eye-catching to potential fund switchers. On the sell side of the journal, costs of the weakest carrying out supplies are pushed down also further. Undoubtedly, all fund monitorings will certainly participate in the ritual if they pick to make it through. This kind of window clothing is, by the majority of definitions, neither hypothesizing nor spending. However, no one seems to appreciate the values, the legitimacy, or the fact that this by high market reduced pick to a lot more refined kind of window dressing takes place throughout the schedule quarter, however, is unwound before the portfolio's quarterly records get to the glosses. In this less prevalent, yet much more deceitful, range, the supervisors invest in safety and securities that are clearly out of sync with the fund's published investment policy during a duration when their certain specialized has fallen from grace with the experts. For example, including product ETFs, or popular arising country concerns to a huge cap value fund, and so on. Revenues are taken before the quarter ends to ensure that the fund's holdings report remains uncompromised, yet with boosted quarterly results. A third kind of window dressing is described as survivorship, yet it influences mutual fund capitalists alone, while the others undermine the information utilized by, and also the market efficiency of, specific safety investors. You might intend to research study it. Possibly 90% of the price activity in the equity markets is the result of institutional trading, as well as institutional money supervisors seem to be a lot more concerned with politics, and also advertising and marketing than they are with investing. They have made by high, offer reduced the accepted investment approach of the mutual fund market. Individual safety capitalists get imprecise signals and also sustain security losses by relocating in the incorrect instructions. From a logical perspective, this quarterly market value fact, artificially developed need for some stocks, as well as unwarranted weakness in others, throws almost any type of specific protection or market industry fact totally out of whack with the underlying firm principles. Yet it gets back at much more unclear, and also not in the lovable sense. Just for the enjoyable of it, think of the demand-draw influence of an ever-growing list of ETFs. I do not think that I'm alone in believing that the genuine definition of safety and security rates has much less, as well as less to do with company economics than it does with the early morning betting line on ETF horses. The dot-coms of the brand new millennium. Do you keep in mind the circle of gold from the 70s? Isn't GLD, or IAU, concerning the exact same point? The web influence of these, euphemistically labeled, year-end tax obligation saving techniques, is quite a lot the very same as that of the kind one window dressing defined over. Simply placed, get out there and also purchase the November 52-week lows, wait for the strange, as well as regular January result to be reported by the media with eyes large closed or, as well as pocket some simple revenues. There just might not be a technique to in fact understand the real value of a share of common stock. Is market rate a feature of company principles, fabricated need for, acquired safeties, or different types of institutional home window dressing? To over-streamline, a dish for success would include purchasing for investment quality stocks at bargain costs, enabling them to simmer up until an affordable, predefined, earnings target is gotten to, as well as set. Yeah, I do miss out on the days when there were just bonds as well as stocks, but perhaps I'm simply a bit also old-fashioned. Interesting place Wall Street. As financiers, and also we all are capitalists these days, it is crucial that we comprehend the affectations of the stock market pricing data we use to aid us in our decision-making efforts. There are at least 3 kinds of window dressing, none of which should make you especially satisfied, and also all of which should make you examine the honesty of companies that either authorize, carry out, or condone their use. A third form of home window dressing is referred to as survivorship, but it affects mutual fund investors alone, while the others undermine the info utilized by, and also the market performance of, specific safety and security financiers. From a logical point of sight, this quarterly market worth reality, artificially produced need for some stocks, as well as baseless weakness in others, tosses nearly any kind of private security or market field statistic absolutely out of whack with the underlying company principles. Is market rate a function of company basics, synthetic need for, acquired safeties, or numerous forms of institutional window dressing? However, it is difficult to say for certain which of these factors has the greatest impact on market rate. There is no set formula for determining market rate. Rather, the term market rate merely describes the price that would be paid by a willing buyer to a willing seller, i.e., the price at which both parties are satisfied. While responsibility for this answer can only be informed conjecture, it is possible to provide some examples of companies for which the market rate is either above or below $2.50 per share. Considering the first example, one might argue that there are certain basics associated with market rate's business model on which to build future growth, e.g., its support services. If this were true, then perhaps it would be possible that market rate's true value would be $2.50 or higher per share when considering the entire business. However, this does not appear to hold much water considering that market rate was in a position where it could no longer afford to continue its support services and was forced to sell itself in order to survive. The second factor, synthetic need for acquired safeties, also does not likely hold much water. While market rate did conduct business with companies to which it could sell claims receivables, its primary source of revenue was derived from the sale of support services. This is further detailed below. Thus, this factor should be discounted in terms of market rate's price per share, $2.50. The final factor, and perhaps one of the most important, is institutional window dressing. While market rate did not experience the same window dressing that we will see later in this article, it can be reasonably inferred that market rate fluctuated for 2 reasons. Supply and demand, similar to the price of gas at the pump. If the demand for market rate services was low, then it may have driven down its price per share to below $2.50. However, if market rate fluctuated on a regular basis beyond that of normal supply and demand fluctuations, then this would be more predictive of future market rate fluctuations driven by institutional window dressing.